Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Welcome to the bigger picture. Me, Ryan Huang, and we are looking at how global markets are being shaken up, at least last Friday, after President Donald Trump's tariffs barrage against nearly all U.S. trading partners. Dozens of economies, including Singapore, will face new tariff rates of between 10 and 41%. Implementation will take place on August the 7th instead of July the 31st, as previously announced, which gives governments a window to rush to strike deals with Washington to set more favorable conditions. So what's ahead for Singapore and the rest of the world when it comes to the global outlook? Let's check in now with Vishnu Varathan. He is the head of economics and strategy for Asia at Mizuho Bank. Vishnu, good morning. How are you doing today?
Good morning, Ryan. Doing well, thank you.
All right, it's going to be a nervy week as we count down towards August the 7th. So let's start with how this could all play out for Singapore. So we've got tariffs. It looks like 10% at least for Singapore right now, the baseline. How is this all going to affect Singapore when you consider already, not too long ago, Singapore downgraded our forecast to the 0 and 2% range?
I mean, that's a really good question. So on a technical point, there is every chance that Singapore's economy for the year will perform better than the growth forecast, primarily because first half was really good, but Feds are real. So Singapore, the 10% tariff, if it applies, I mean, we learn new things every day. If it applies, relatively, it's good news because it means Singapore is at the lowest end of almost everyone ubiquitously affected by tariffs. But there are two other layers of risks that remain. One is overall global demand will shrink from a place of no tariffs to tariffs, as you rightly pointed out, covering an entire range. And given how, that means that there'll be less for consumers to spend and all the friction involved. And the other point is Singapore is very tightly plugged into regional and global networks. So the tariffs that apply to us are not the only consideration or risk. Instead, regional tariffs and global tariffs do matter. And there's very little clarity on exactly how all of these will work. So there's a good deal of uncertainty and some downside risks left.
Yeah, as you previously outlined, the tariffs have been reviewed but not resolved. There are many knock-on implications, especially when you consider how Singapore is an open economy and depend on exports. So when you look at how things are being reshaped in terms of global supply chains into more regionalized or protectionist blocks to some extent, what does this mean for Singapore as a hub?
I think, it leaves a lot of unknowns there. So in the very near term, what it could mean is it could mean a lot of the investment flows that come through Singapore into the region could be somewhat stifled or held back until further clarity emerges. So that's one thing that comes across. The second is wherein higher tariff rates apply elsewhere in the region. Some of the regional supply chains may see some slowdown, and it'll still be too early to ascertain what the effects are, given we saw front loading earlier this year, so on and so forth. And as you pointed out, a lot of things remain unresolved. For one, we don't know whether whatever announced will be the ultimate tariff rate, or President Trump could change his mind for leverage or for negotiations. The second one is sectoral tariffs, which are really the big fish here, have yet to be fully revealed. So we don't know, and we shouldn't take too much consolation in the 10%, because from what we have observed so far, sectoral tariffs tend to be higher, at least at 20-25%, if not 50%. And that applies to a whole range of goods, including pharmaceuticals, which Singapore is plugged into. And the last factor here, not necessarily the last, but the other prominent factor is transshipment will incur much higher rates. Vietnam has been the one model we can look at where, Trump suggested 40% rate. Exactly how these will apply and the conditions under which these are determined, presumably by the US, mean that there is greater uncertainty and some possibility and threat of further trade shocks. So these are really the worries that will remain in place, even if we know the tariff rate and we can deal with it.
Yeah, talking about things to worry about, we are expecting things to get more expensive with these tariffs. So how much should we worry about higher import costs filtering through the supply chains and, of course, going into Singapore imports like food, energy, and electronics?
That's a really good point that you brought up. And that's where I think it's a bit more interesting and hazy, because we know for a fact that, the aggregate impact on the US would be higher prices there. But we're not completely sure that applies to a lot of the Asian economies, Singapore or the ASEAN, because goods diverted away from the US could end up in this part of the world. And that could mean softer consumer prices for, you name it, EVs, so on and so forth, even for food, because the US is trying to aggressively promote US farm exports. That could mean a surplus of some farm exports in this case, and that could lower prices. But that's really just a hollow consolation, given that what we are really worried about is the negative demand shock rather than the upside to prices. So that's what we keep in mind as we look at this tariff. And your point about it splitting the world, that splits the world further in terms of inflation outcomes. I mean, it would form a very disjointed world, and one in which we get less aggregate income, even if our share of the pie relatively doesn't shrink so much.
All right, talking about the outlook for the economy, the U.S. economy got a bit of a dent when it came to the latest non-farm payrolls data. I think we saw 76,000 jobs last month, well below the forecast of about 100,000. And you had the May and June numbers marked down big time by nearly 260,000. And to top it off, Donald Trump decided to fire the messenger. What do you take away from that?
I mean, the worries are twofold. The first worry doesn't surprise us, even though it's still a worry, which is a slowdown in U.S. jobs. As uncertainty increases, costs increase for U.S. businesses and we assume not all of the tariffs will be absorbed by the exporters. Then I think it makes sense to think that, U.S. employers would be a lot more cautious about costs, maybe not hire as much, and perhaps even shrink their labor force. Anecdotally, we've seen this. So softening labor market numbers don't surprise us that much. But the other layer of negativity here is firing the messenger, as you rightly put it and succinctly put it, casts further doubt on data that come out, which means markets may then begin to discount, justifiable Fed decisions to cut rates that could lift U.S. yields and weaken the dollar, which translates into a lot more volatility in FX markets and, unfortunately, higher interest rates for the global economy, even if growth conditions are diminished. So it's the worst of both worlds.
All right, so a lot to look out for when it comes to the implications of what has been announced on the tariff front. And of course, we'll be watching them very closely and keeping you up to date on Money FM 89.3. And we've been in conversation with Vishnu Varathan. He's the head of economics and strategy for Asia at Mizuho Bank. Vishnu, thank you for your time and insight this morning.
My pleasure. Thank you for having me, Ryan.
All right, always great to have you on. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.